Okay, so welcome to the recorded presentation on journalizing purchases and cash payments. So we'll have two sample problems and we will present the journal entry or entries. At the same time, we'll also include analysis of the transaction. So the first sample problem it says here, on 10th January 20X1, ABC Limited bought inventory worth $16,000 for cash. ABC Limited uses the perpetual inventory system. So to journalize this transaction, we have debit inventory and then credit cash at bank. So you will notice that in the analysis portion, we have increase, okay, in one asset. Okay, so in this case, inventory and decrease in another asset. Okay, in this case, cash at bank. So if you look into the equation, one side of the asset increases, but at the same time, the other side decreases. So it is compensated by this increase and decrease in asset. Okay, so in sample problem number two, we have on 12 January 20X1, ABC Limited bought inventory worth $8,000 and over 30 or and 30th. So in this case, if you see this kind of statement, it means that the purchases made was on account. Okay, so it was purchased from M&O Limited. On 15th January 20X1, ABC Limited paid M&O for the 10th January 20X1 purchase. ABC Limited uses the perpetual inventory system. So to journalize transaction, it will be debit inventory and then credit accounts payable on 12th January. Of course, that will be 8,000. And then on 15th January, we have the payment, debit accounts payable and credit cash at bank. So in the analysis portion, on 12 January, there is an increase in asset and then increase in liability. So you can see on two sides, there will be both increase. So the accounting equation is still balanced. You can see in the payment at 15th January. Okay, so we have debit accounts payable and credit cash at bank. Okay, so in analysis portion, we have decrease in liability and decrease in asset. That's the end of the presentation. Thank you very much for your time.